All right, how's everybody doing today? The market bounced. The market came back today in great fashion. It came back today in great fashion. Truly a nice bounce off of those lows. So right now, everybody, if you look at the 4 hour time frame, even the 1 hour, not the 4 hour, but the 1 hour 4 hour time frame and the 1 year, 1 day time frame, BA puts, Apple calls. Yeah, so six hustles. Interesting about Apple though, right? Apple is in a great place, right? Apple may be in a little bit more trouble. Okay, I was reading an article today stating that the 50 EMA has officially or is on its way to crossing over the 200 EMA on Apple. Okay, so the 50 EMA is on its way to crossing over the 200 EMA on Apple. If that happens on Apple, that's a bearish signal. Okay, it's a bearish signal if that happens on Apple. So just something to keep an eye on. Something to keep an eye on. So it hasn't crossed over yet, but it's like it's shooting down towards it at this very moment. So something to keep an eye on when it comes to Apple and looking at that 50 EMA and that 50 EMA and the 200 EMA. Okay. Whenever you see a cross to the upside, that's a bullish signal. When you have when the 50 cross over the 200 EMA, when you have the 50 crossing to the like a crossing over it to the downside, that's a bearish indicator that, hey, this stock may have some room to go. Only thing about it is we have a strong demand zone on Apple all the way from 173 all the way down to 160. So it will be kind of hard to break through. So yeah, just keep eye on it. Personally, I think it's at a great price, a great area. Potentially can fall down some more, but it truly is holding around this area though. So we'll see. But I like Apple. I'm definitely thinking about maybe putting like 10,000 in the Apple and kind of letting it sit for like a 2 year contract. I've been looking at a few contracts for it, so I'm thinking about doing that. But we'll see. We will see. All right, everybody. So where are the buyers, right? How do we identify? I'm waiting for it to hold 173. I like it. I like that. Yep, definitely like that, because if it doesn't hold 173, we could potentially shoot back down to that 167 area. And I would see if we go down to 160, I'm in no matter what. If Apple happens to go down to 160, I would definitely get into Apple immediately. Okay, immediately. All right. So where are the buyers, right? Where are the buyers? So how do you identify where the buyers are actually located on the chart? Okay. In other words, how do you identify a demand zone? A demand zone, everybody, is is a place on the chart where there's a lot of buyers in this place based off of historical data. Okay. Based off of historical data, there's a lot of buyers in this particular place. All right. So what I'm going to do is I'm going to take you into my screen and we're going to break down how do you identify a demand zone. All right. What things you're looking for to when you're looking at a demand zone. How do you know if there's buyers in a certain location or not? This is very important when it comes to trading stock options. It's very important when it comes to the stock market in general. You want to know where the sellers are and you want to know where the buyers are. Okay. You want to know if the buyers are buying, you want to be buying right along with the buyers. If people are selling, you want to be selling yours, taking profits and things of that nature. Okay. So what we're going to do on my screen, let me go ahead and set everything up. I wish I can use my other computer. I don't think I can though. But let me set everything up and we're going to jump in. So if you're on Instagram right now and you want to see my screen, you can jump on over to my YouTube channel. You can type in YT, type YT right now, and I will DM you the link to my YouTube channel, or you can just go to the link in my bio. Either or. All right. And also SPY had a nice push up, as well as Nvidia had a nice recovery as well. I truly want Nvidia to fall down. I truly want Nvidia to fall down so much it's ridiculous. When I saw it start shooting up today, I was like, crap. Okay, I wanted to fall down at least into the 700s, and that was going to be a nice buying opportunity in the 700 range. This $900 range, it does scare me as far as entry, because you do not want to buy into a stock at all-time highs. You can be setting yourself up for failure. Yeah, just leave it. I guess let's leave it at that. You can definitely be setting yourself up for failure if you buy in at all-time highs. But at the same time, NVIDIA is running. NVIDIA is showing strength. NVIDIA is truly, NVIDIA is like a unicorn almost in some sorts, right? It's just moving and moving and moving and moving and moving and moving and moving. Okay. So let's do this right quick. What I want to do is let's go to, would this one work? No. Let's take a look right here. Okay. All right. Let's go to SPY. Can you all see my screen? I don't think you can. Let me let you see share my screen. 4-hour time frame. There we go. Okay, perfect. Beautiful, beautiful, beautiful. Remove all these drawings. Clear data set. All right. So let's break down this particular stock. Okay. Let's break down this run and kind of go from there. All right. So first thing first is this. You cannot see my screen, can you? Let me share my screen. All right. Here we go. All right. When you're looking at a demand zone, or you're looking for a location or zone where the buyers may be hanging around it, just chilling. Kind of think about and no offense to anyone, kind of think about, you remember back in the day, or maybe even today, where the old heads and the winos used to hang around the corner store every single day. Like, you knew for a fact every single morning, every Saturday morning you go to the barbershop, the winos are hanging around a particular store. Okay, that's the same thing as you think about a demand zone. A demand zone, what you're looking for a location. Okay, you're looking for a location where the borrowers are hanging around. Okay, a location where the borrowers are actually hanging around. Okay, so this is how you identify. This is how you draw it. This is how you look it up. This is how you find it. This is how you identify a demand zone. All right, so a demand zone is going to be identified after a certain stock has went to a high and then rejected that high. Okay, so for example, on my screen right now, let's focus right around here. Okay, so we see that this stock, get my drawing tool. We see that this stock was running up, it pushed up, and then it stopped right here. Boom, the stock stopped right here. All right. Now, when the stock stopped right here, it was on an upward move. Okay. Upward trend, upward move. The stock was going up. All right. Next thing you know, what happened was the stock fell back down. Now, there's multiple ways you can draw the location of a demand zone. There's multiple ways, but personally, I personally like to use I like my zones to be kind of like the larger zones, right? So when I break it down, I'm going to show you kind of how the larger zones look, all right? So you see right here, the stock was pushing up, and then next thing you know, it got hit with resistance. So when this stock pushed back down here, the next thing we're looking for to find out where the borrowers are, or the buyers are, right? Not the borrowers, but the buyers are, we're looking for a break above this level. So let me go here. Draw resistance area right there. So boom. Now I have a resistance area. Okay. Let me put this down so you can have more screen. Yeah, there we go. Okay. So now I have this purple line. This purple line indicates this is a location. If the stock price goes back above this level, that means now we're going to have a demand zone somewhere around here because the stock came down here, then it stopped, and then buyers start buying in, buying in, buying in, buying in, buying in, and then boom, they bought in enough to push the stock above the previous high. Okay, it pushed the stock above the previous high. Okay, so when it broke above this little area right here that we could not break above, this is called a break of structure. Okay, a break of structure. When it broke that structure, it created a demand zone. So what I would look at, I would take this candlestick right here. You can take the bottom. Some people take the full candlestick, make this full candlestick a demand zone. That's what some people do, right? Some people take the candlestick before and make it into a demand zone. All right. I personally take the wick, the body to the bottom of the wick. Okay. If there's a wick, if it's not a wick and it's a small candlestick, I take the whole candlestick. Okay. So right here, I would come right here. Come right here. Get my box. Come right there. Come down and draw a level all the way down here. Okay. Now that's my demand zone. Okay. That's a demand zone for me. All right. Once again, why is this a demand zone? Because this is the candlestick right here that shot up and broke above, or shot up and started making this high and pushed all the way up. Okay. So right here, okay, right here, this is the place it was pushing up. It rejected this level, pushed back down, then eventually, boom, pushed all the way back up and broke above this purple line, which was that previous high, and created and made a new high. Once that happened, that made us a demand zone. Okay, that made a demand zone for us. Okay, now let's keep going. Let's go right here right now. All right. So right here, same thing. Okay, exact same thing. We're in an upward trend, a bounce out of this demand zone, and this upward trend is going up, it's going up, it's going up. It comes right here and it stops. Okay, it comes right here and it stops. When it stops, we had a hard push down. Had a hard push down. All right. When we had this hard push down, what happened? It pushed back up hard and came right here. So my question would be, would this right here be considered a demand zone? Would this candlestick right here be considered a demand zone? Okay. The answer is no. It would not be considered a demand zone. Why wouldn't this not be considered a demand zone, everybody? It's not a demand zone because it did not break this previous high right here. It did not break this previous high. It came to the previous high right here, did not break it, and fell back down. Since it did not break that previous high, therefore you have to say what? It's not a demand zone. The key to making this a demand zone is breaking this structure that was put in place right here. If it does not break this structure, it is not considered as a demand zone. Okay, so boom, we come right here. We understand this is structure right here. They both base at the same spot. We push back down. And now when we push back down, this candlestick happens. It pushes up and it breaks through. This is the first candlestick that initiated the push up. So I come right here now, and now I draw this as a demand zone. Because this push up is the push up that created the break of structure right here. Okay, let's keep moving over. I didn't mean to do that. And then you can make these areas, right? So you can make these areas go all the way across. Make them go all the way across. Okay. So they're going all the way across. Okay. So now you say, Chris, why is this important? This is important to understand because whenever this stock decides to fall back down, or if it ever comes back, that hurt with my tongue. If it ever falls down again, that's how this market run. That thing might just roll and roll and roll and roll and roll, right? But if it falls back down, we know something that's in place. We know we have buyers in this area right here. We know we have buyers in this area right here, meaning this may be a location where it's a good place to buy back in. Okay, let's keep going. See if we find any more. Okay, so once again, here we go. Let's find another one. Okay, the stock started to push up, push up, push up, push up, push up. It consolidated some, then it pushed up right here. Okay, we see it pushed up right here and it stopped right around here. See this area right here? It stopped right around here and fell back down some. Okay, fell back down some. So boom, now we see it starts to push up, push up, push up, and it breaks structure again. Right around here, we even come right here to the top. We see it broke again. So when it broke this area right here, this made this candlestick right here a demand zone. Why? Because this is the candlestick that actually started to push up. You can actually make it this candlestick as well because this candlestick pushed up. Either or, whichever one you choose. Okay. I like doing body to the bottom of the wick. So I come right here. Boom. Extend it all the way out. And boom. That's a demand zone now. Okay. That's a demand zone. Let's look at it again. So boom, this level right here broke above this previous high, made a new high. Then it fell back down right here. When it fell back down, look where it came to. It came right to the demand zone. When it came into the demand zone, what did it do, everybody? It bounced out of the demand zone and shot right up here. And then it came back to the top, almost at the top of the demand zone, and then shot back up here. Beautiful. 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 Okay? That's how you confirm that, hey, listen, there's buyers right there. All right. And now you can see we're sitting right around this location right now. Okay. So right now, if I'm looking at SPY, all right, if I'm looking at SPY, I have areas on my chart that I know is a location where strong buyers may be. Okay. So for example, right now, I can look at this roughly around this 507 area to this 505.50 area. And I know this is a 4-hour demand zone. Meaning this is a strong demand zone, and I know there's buyers in this area right here. So if the stock happens to come back down to this area, that may be a buying opportunity because historical data tells me that the buyers are at this location. Okay? The buyers are at this location. Now, if it breaks beneath this demand zone, what does that tell me? It tells me the buyers have moved out the way. The buyers are no longer in this location at the moment. And now we're looking for the next location where the buyers may be residing at on the 4-hour time frame. You can see that's down here, this 496 area. Okay. So what I do every morning, I start off on the 1 year, 1 day, finding demand zones, supply zones. Then I go to the 4-hour time frame, finding demand zones, supply zone. Then I go to the 1 hour time frame, finding demand zones and supply zones. And I'm looking for the closest demand zone to the current price. Listen to what I just said. I'm looking for the closest demand zone to the current price. So if the current price is 516, I'm looking for the closest demand zone to that 516. If I had a demand zone at 512 and a demand zone at 506, I'm focusing on that 512 demand zone first. We break that 512 demand zone, then I'm going to dwindle myself down. The next demand zone, the next demand zone, the next demand zone. Okay? All right. So this is how you identify locations where the buyers are at by finding your demand zones on your screen, on your charts. Okay. And as long as that demand zone has not been broken, you can keep that demand zone on your chart until it's broken. Okay. Until it's broken. All right. Let me stop right there for a second. Let's see if we have any questions on YouTube or on Instagram. Any questions? Any questions? Any questions in the chat? Where the chat box at? Here we go. Chris, if you had basically $100, what would be your risk management strategy? When you get a chance to answer it, would be great. So think about this: you're successful. Think about this: $100, $1,000, $10,000, same strategy regardless, right? If I have $100, the first thing I'm going to ask myself: how many trades am I going to make? Am I going to make one trade or two trades? Okay, exact same thing. I'm going to make one trade or two trades. If I'm making two trades, I'm doing $50 here and $50 there. $50 on one trade, $50 on another trade. If I'm doing one trade, I'm doing $100 on this particular trade. The goal is not to lose anything. If I have $100, I'm not trying to lose any more than 10%. Okay, not trying to lose anything more than 10%. Okay, and I'm looking to take home anywhere from 10 to 20%. Okay, so if I got 100, I'm looking to make anywhere from 10 to 15. I'm looking to make anywhere from 10 to $20. If I have, and I'm only willing to lose anywhere from $5 to $10. And I take that, and I'm going to take that same game plan, no matter what's going on, every single day. I'm going to understand how much my goal is to make, and how much I'm only willing to lose. I'm only willing to lose $5 to $10, and that's how I would tackle it. Great question, though. You're successful. Great question. Any other questions that we have? Any other questions? Any other questions? How you doing, Miss Howard? Lloyd, Six Hustles going on. Matter of fact, yeah, Six Hustles. Let me show you this right quick also. Let me show you this. Let me show you Apple right quick. All right. This is what Apple is looking like, right? Go take a look at Apple. All right. So if we take a look at Apple right here, do I have my 15? I don't think I do. Go to the 1 year, 1 day. Come here to the studies right quick. 9/21/21. Put this at the 50. For this example, make it purple. Okay. All right. All right. So Apple. Did I do my standard deviation? I'm tripping. Like, why is it looking like that? All right. I'm gonna just take off my 21 right quick. Change 21 to the 50. And there we go. Okay. All right. Let's take a look at it. So right now on Apple, this is the 1 year, 1 day time frame. Okay. On the 1 year, 1 day time frame, I want to break this down. I'm gonna show you this stock. Apple, and I'm gonna show you an Apple where it's like a bearish signal about to happen. Then I'm gonna show you a bullish signal that's about to happen on a certain stock, which I'm keeping a close eye on. Okay, so right here, everybody, Apple is it was previously oversold, and it's still probably like really oversold territory. But this gold line right here represents the 50 EMA. Okay, it represents the 50 EMA. This green line this red line represents the 200 EMA. Okay, let me remove the green line so it's out your way, so you don't even see that. All right, there we go. So the gold line represents the 50 EMA. The red line represents the 200 EMA. As you can see, the gold line is approaching the 200 EMA. So when that 50 EMA is approaching that 200 EMA, that's a bearish signal if the 50 EMA, which is that gold line, crosses over the 200 EMA, which is the red line. If that cross happens, move everything out your way so you can see clearly. If that happens, this is a bearish signal for Apple. Okay, it's a bearish signal for Apple, meaning Apple may have some room to go back down. Okay, it may have some room to go back down. Now, if it does not cross over that, the 50 does not cross over the 200, it's a signal of saying, okay, let's sit and wait if we get some consolidation. And when that goal line start to turn its head back up and start going back up, that is a bullish signal. Okay, let me show you an example about this in the past. Okay, take a look right here. The last time, yep, right here, beautiful. The last time Apple, let me do the 4-year one day. See a little bit better. Okay, the boom, 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 boom. Oh, it ain't on this one. 4-year one day. Nope, can't see it. Okay, but right around here, it's kind of hard to see, but you can kind of see it right here. Not that hard to see. The last time we had this signal, right here. All right, the last time we have this signal right here, you see that it was, there we go, perfect. It was March 17th of 2023. We had the 50 EMA crossed over the 200 EMA. Okay, the stock price was roughly around 147. From that moment, look how far this stock ran. It went from 147, because this is a bullish signal right here. Okay, right here, it's a bullish signal when this crossed over. When this goal line crossed over that 9 EMA right here back in March 2023. Okay, that's a bullish signal. And since that moment, look how far the stock has actually went. It went from 147 all the way there we go to 199. Went up $50 since that crossover. Okay, and that was the last time the stock, the 50 EMA crossed over the 200 EMA. So that was crossing over to the upside. Now we're looking to cross over to the downside. Okay, all right, everybody, a sleeper stock. Let me give you guys a sleeper stock right quick. As you can see, I've been doing my due diligence breaking this thing down. Okay, sleeper stock, everybody. All right, this is HPE. Okay, HPE. All right, this stock, all right, has multiple times it has broken above the 50, has broken above the 200 EMA, but it didn't do too much. It just kind of consolidated. Okay, just kind of consolidated. But right now, what makes it different this time, in my personal opinion? If you look right here, the 50 EMA has officially crossed over the 200 EMA on the 1 year, 1 day time frame. Okay, on the 1 year, 1 day time frame, it has officially jumped over, crossed over. This is good news, right? But Chris, like you said previously, it's crossed over multiple times and nothing has happened. You're absolutely right. Okay, but what makes HPE different this time than all the previous times? Okay, I'm glad you asked. Let me break it down to you. All right, everyone, HPE is in partnership with NVIDIA. Okay, HPE is in partnership with NVIDIA. They've actually extended their partnership with NVIDIA as well, which is a bullish case. Okay, a bullish bull case from the fact that they are in partnership with NVIDIA, which is one of the hottest companies, and it's going to be a game-changing company in the future. Okay, to change the scope of life. All right. Now, the fact that HPE is in the partnership with NVIDIA is golden. Okay. Now, this is the thing about it. What HPE provides for NVIDIA, which is Edge AI, is going to be something amazing. It's going to help NVIDIA be able to, it's going to help AI in general be able to be more streamlined and not have to use the cloud-based systems to be proficient, as well as it's going to allow it to move a lot faster. Okay? It's going to allow everything to move a lot faster. So HPE does have some great technology. They're partnered with NVIDIA, so they're already riding the coattails of the big dog. Okay. Sometimes when you ride the coattail of the big dog and you're providing the big dog with valuable value, the big dog wants you to stay at the table as long as possible. So as long as you at the big dog's table and you're eating and the big dog is eating, guess what's going to be eating? You're going to be eating as well. Okay. So this is a reason why I like this particular stock. All right. I like this stock. I like the fact that it just crossed over. I believe right now I'm still doing a little bit more research on it to see what price target's looking like. Right now, we see that we had a high of that $20.07. Then it pulled back. So I do have a few layers right now, but we're currently inside of that 1743 and that basically that $20 mark. Okay, we're basically trading inside of that box for the past, 6-7 days. We had a crazy bounce right here from $14. We had a strong day right here. Go back. Okay, right here we had a strong day 1, strong 2 days, strong 3 days. That 4th day we pushed up fast, but we rejected. That was that Friday, if I'm not mistaken. And then so on and so on, we pushing back down. Okay. Now, this is not a stock that I'm going to day trade. Not day trading this stock at all. This is one of the stocks that you grab and you hold. Okay. You grab this stock and you hold. This stock is very cheap. Okay. This stock is very, very cheap. It's at $18 right now. And the option contracts are very affordable. Okay. This is something you buy for a year, 2 years, and you sit back and you forget about it. Okay. Sit back and forget about it. This is not something that you're going to day trade every single day. Okay. So HPE, everybody, this is a bullish. All right. This is a bullish signal because the 50 is crossing over to 200. Now, of course, you want to do due diligence on other places as well. So if I come right here to the week time frame, the 1 week time frame, look what you see. Let me clear everything and then redraw it for you. Take a look right here. We see we have resistance, right? We have resistance right here, meaning this is the 1 week time frame. That means every candlestick represents 1 week of buying and selling. Okay. So as you can see right here, I'm going to put out the locations for you. Right here, the stock attempted to break, couldn't break it. That was back in 2020. Right here, attempted to break, couldn't break it. Right here, attempted to break, couldn't break it. Right here, attempted to break, couldn't break it. Right here, attempted to break, could not break it. Everybody, that goes all the way back to October 2019. The stock has attempted to break this level and could not break it. So right here, October 2019, come right around this area right here. We have April of 2021. Come around here, we have January of 2022. Come around this area around here, we have December of 2022. Come around this area right here, we have June, July, August, September. Could not break that level of 2023. Okay, could not break this level. Now, a few days ago, just a few days ago, something interesting happened. The stock broke above this level of resistance. This is what makes this particular break different than the other ones. Okay? This is what makes this 50 over 200 EMA different than all the other ones. It broke this resistance, a level that has never, let me go back and say that again, a level that has never been broken since the conception of this stock, which came in 2019. This price has never been at this level. It's never been at $20. And now we're at $20. Why is it at $20? Why did it happen for 4 days, go shoot up straight crazy? Is it because it's in partnership with NVIDIA? Is it because it extended its partnership with NVIDIA? Is it because it's riding the coattails of this AI trend? Remember, if you're valuable and you've been invited to the table, as long as the head of the table is eating, you're eating as well. Okay, so what we're looking for right now, what I'm focusing on right now, I want to see what's going to happen when it comes back and retest this level. So as you can see, it broke through resistance. And like I always tell people, I don't want to enter as soon as it breaks the resistance. I want to wait for a pullback to see how it reacts to that level that was just broken. And right now, for the past 1 day, 2 day, 3 day, 4 days, we have held this level as support, which is that 1790 area. Okay, 1790 area. Okay, very, very, very important. All right, so just something to keep in your back pocket, everybody. Put that on if you're a trader, put it down on your watch list to watch this trade and see how it plays and see what it's going to do for a while. And then once you see that, you know, you can make that decision on how you want to do it. What up, Calvin? What's going on, bro? Strong resistance, anything tied to the video gonna run right. Exactly. To confirm the demand zone with volume, does low volume and low SR on a strong support level indicate a strong buy for calls? Yes, HPE, young poppy. HPE, yes. His name was Young Poppy. That's his name's Young Poppy, y'all. To confirm the demand zone with volume, does low volume and low. So no, when I'm confirming my demand zones, my entire thing is I wanted to break the previous high. If we break that previous high and make a breaker structure, that's considered demand zone. Not no matter if it's low volume, low RSI, high RSI. Not as long as it breaks that structure, that's what's considered. That's where the buyers are for my thought process. Building Showman. How much is the masterclass? The masterclass is $497 for regular admission and $997 for VIP. The class starts, everybody, March 25th through March 29th. Okay, March 25th through March 29th. If you want to sign up for the next class to learn, like if you're saying what in the world this dude with the gray hair talking about, this is my real hair, everybody. What is this guy talking about? I just put the link in the chat. Okay, I just put the link in the chat, and it's also on the screen right there. You can go to that link and register for the upcoming mastermind. It's also in the description box. And if you're on Instagram, you can type in the word mastermind, and I will send you the link to join my class. And what I'm going to do, in this class, I'm going to teach you how to trade stock options from A to Z. I'm going to teach you how to break down stocks, how I broke down and found the demand zones, how I went and found the 50 and the 20 EMA and all those things and potential long-term trades. Okay, so with HPE, yeah, definitely HPE is a long-term trade. Will the supply and demand zone show on every time frame? Yes, it will show on every time frame. When you click from the 1 hour to the 4 hour and so on, it will show on every time frame. How much am I buying? Not sure yet. Okay, I'm not sure yet. I need to go through the contracts and see which strike price I'm looking at buying, and then from there I will make my decision on how much I'm buying. All right, everybody. Well, listen, everybody, if you're on YouTube right now, hit that like button, hit the subscribe button as well. If you're new to my channel, hit the subscribe button. Everybody hit the like button right now. That said, help the algorithm and all that good stuff. So hit the like button, hit the subscribe button if you're on YouTube. Everybody that's on Instagram, if you want to join the upcoming mastermind, comment the word mastermind and I will DM you the link. If you're on YouTube, you can go straight to my description box and it's sitting on there. Also, everybody, tomorrow morning, 9:15. Tomorrow morning at 9:15, I am trading live. Live trading Wednesdays tomorrow morning at 9:15 right here on my YouTube channel. Okay, right here on my YouTube channel. So go ahead and set your notifications to notify you as soon as I go live, so you guys can kind of witness some live trading. Right, you can see the platform, you can see my thought process, you can see me win, you can see me lose. Tucker boy is got to do one word: put the mastermind together, no spaces in between. So you can kind of see everything. All right. If I win and make $2,000-$3,000, you get to see it. If I lose $2,000 or $3,000, you get to see it. Okay, get to see the real deal. All right, the real deal. Okay. All right. What's up, Trucker boy? Let's see. Any other questions before we get out of here? All right, everybody. Listen, man. You all have a good one. I don't think I have any more questions. Oh, hey, Chris. I took the class back in October. I never joined the Discord. Can I still join the Discord? Yes, you can. KB, send me an email to admin@iwontknowledge.com. Okay. KB, send me an email to admin@iwontknowledge.com. Also, everyone, Thursday is our first day of the book club. Okay. Thursday is our first day of the book club. So if you are a trader, okay, if you are a trader that's currently trading, if you took any of my previous masterminds, I would highly recommend that you join for the book club, because what we're going to do is we're going to start reading all type of trading books, and we're going to be learning from the perspective of others, right? We're going to be focused on the psychology. We're going to be focused on entry points, everything that's in a trading book. Over the course of this book club, we're going to read an awful lot of books. Okay, a lot of books. So we're going to meet twice a week, twice a month. And we're going to first start off, we're reading Trading in the Zone by Mark Douglas. Okay, Trading in the Zone by Mark Douglas. All right. So that's going to start this Thursday. Okay, this Thursday. If you miss a session, every session is recorded, so you will be able to go back and rewatch. You'll be able to go back and rewatch the breakdown of the chapter we read or whatnot. Okay, so and if you want to join the book club, it's only $15 a month. Everybody, only $15 a month. Okay, only $15 a month. Everybody, all right. And that link is in the chat as well. And I just put it on the screen for you. It's go.iwontknowledge.com/book club if you want to join that. All right, everybody. I think that's all the questions, brother. I'm so excited about the course coming up. Let's go. Hey, Haley Hands. Let's go. If you're already registered, congratulations. Okay, congratulations. Listen, we're going to listen. The mastermind, I love doing these masterminds, right? Because I get to spend 5 days with you. Okay, I spend 5 days with you. Monday, Tuesday, Wednesday, Thursday, Friday, and sometimes Saturday. Okay, we spend time together 2 to 3 hours a day. Okay, 2 to 3 hours a day. It's us on a Zoom call, and we're breaking down this stock market. I'm teaching you the elements of how to break down the stock market day by day. And then the beautiful thing about the mastermind is this. It's not that I'm just showing you a PowerPoint here or going back and showing you me going into the stock and finding old stocks and breaking them down so they can look beautiful. No, we also trade live that Tuesday through Friday as well. So from 11 a.m. to noon, that Tuesday through Friday, we trade live with each other. And when we're trading live with each other, I'm showing you inside of, in my real account, in the real market, I'm showing you everything we discussed the previous night. So everything we discussed the previous night that you learned the previous night, I'm going to show it. I'm going to show it to you in the real live market the next day. That's so beautiful, right? So that's why I tell you I spend anywhere from 3 to 4 hours with you every single day when it comes to this 5-day mastermind. Okay. I stretch you in this mastermind. You're going to be confused. You're going to be lost. And then you're going to be found. And then you're going to be good. Okay. And the good thing about it is, Chris, can you answer the $100 risk management question? I answered it, Chris. I answered it. You're successful. You might have stepped away, but I did. I missed the last one. Not this time, bro. I did. So basically what I said was this. The first thing I would do if I'm dealing with trading with $100 account, $1,000 account, no matter how much money it is, I'm going to identify how many trades I'm going to make with that amount of money. So if I got $100, I may make 2 trades, 50 and 50, or I may make 1 trade. That's $100. Okay. Next thing I want to do is I want to identify how much I'm willing to lose. I'm only willing to lose anywhere from 5 to 10%. So that means I'm only willing to lose. If I got $100, I'm only willing to lose $5 to $10 on that particular trade. I want to make anywhere from $10 to $20 profit. So I'm looking to make anywhere from a 10% to 20% profit. Okay. That's what I'm looking for. And I'm playing that the exact same way every single time. I'm not doing anything different. I'm playing the trade exactly the same. I'm playing my setup of how much I'm going to put in, how many trades I'm going to make the same way every single time until I start building my account to that $500 level. Then when we get to the $500 level, I go a little bit different. Do I want to make 3 trades? Do I want to make 2 trades? Or how I want to do it? And keep going and going and going. Okay? All right, everyone, listen, I hope you all had a good one. All praise to the Most High. I will see everyone tomorrow morning right here for live trading. If you guys have any questions, feel free to ask. We'll be here tomorrow for live trading tomorrow, everybody. Okay? Y'all have a good, I said 9:15 a.m. Eastern Standard Time. All praise to the Most High. Y'all have a good night.